Good morning. My name is JB McCarthy. I'm the Development Director for the Financial Services Innovation Centre in UCC. And I'm here this morning with my colleague, Tony Moroney from the Digital Transformation Lab. Tony is also an adjunct lecturer in the Irish Management Institute. And we're here to talk to Robin Speculand, the reason for our call for our webinar. Robin is the author of The World's Best Bank, the book The World's Best Bank, A Strategic Guide to Digital Transformation. And I'm going to hand you over to Robin to do his own introduction. Thank you, Robin.
Hey, good morning to everyone, and thank you for taking the time to be with us today. So I'm based in Singapore, and the background you can see behind the wonders of Zoom. And I've lived here for about 30 years. Been in Asia about 35 years. Originally from Scotland, from Glasgow. I lived in New York, in Australia, and Hong Kong before settling here. And in the late 90s, I was a regional VP in Citigroup Asia Pacific for the corporate bank. And one of my colleagues was a gentleman called Piyush Gupta, who went on to become the CEO of a bank called DBS, which stands for Development Bank of Singapore. For myself, I left Citi in 2000. As much as I love banking, my passion is strategy implementation. And I now run 3 companies all focused on this area. So Bridges, which is a consultancy arm. We run an institute called the Strategy Implementation Institute, and also the Ticking Clock Guys, which is an approach for implementing digital. And I was very fortunate in 2014 to be working not only with DBS, but also with Louis Vuitton, the LVMH group. And both of them at that time were embracing and starting to look at digital. And I noticed there was a big difference between how we implement traditional strategy and the even bigger challenges of getting digital transformation right. Now, why do I say the bigger challenges? Our latest research, which we published last year, shows that now we've gone from 90% failure rate in strategy implementation 20 years ago to finally having more succeed than fail, and we just hit the 48%. But in our research last year, there was an outlier, which has blown up since, which was digital transformation, which was already at 80% then. So today, currently, research tells us, not just for ourselves, but IBM, McKinsey, Boston Consulting Group, 2/3 of digital transformations fail. But I was fortunate back in 2014 to be exposed early, and my company pivoted to see what works and what doesn't in the field. And in 2018, I was chatting with the CEO, Piyush, of the bank, and out of our conversation came the idea of writing the book. We were all set to publish it at the beginning of 2020, and then you can guess what happened. And then Piyush called me up and said, okay, I want you to add a chapter on sustainability and a chapter on COVID. And so we finally published the book 2 months ago. I was absolutely delighted that we hit the #1 spot on both ebooks and books on Amazon within 20 days. We're already preparing for the 3rd print run. It's coming out in a couple of weeks. Piyush and I have both been co-nominated for an award that will be announced very shortly. So a lot is happening around the book. And what's going to be my pleasure with my time today is to share, first of all, the insights. I'm going to give you a little bit of the story, just a teaser. You know, it took me 3 years to research and write the book. And, you know, I've got 30 minutes now to concisely present that to you. So I'm going to give you a little bit of a teaser, and then we're going to open up. It's a pleasure to be with Tony and to JB, and then we'll open up for some of the questions and discussions. So here we go. All right. So just a quick snapshot of the bank. It's a bank out of Singapore. And just pause to think about this for a second. You know, for many of us who know banking and the financial industry, when you think of the most successful banks, we were always thinking of, you know, mostly US centric, you know, the JP Morgan Chase, the Citigroups, or maybe, you know, an HSBC. But now banking is very much being driven. You look at the biggest banks now in terms of P&L, you're looking at China, you're looking at DBS, which was the first bank in the world to simultaneously receive what we call the most prestigious of the 3 banking awards. So for non-bankers, this is like going to the Oscars and winning best movie, best director, and best actor. In banking, to win the banker, the global finance and Euro money simultaneously had never been done before. And they've continued to win the award every year, which I'm very grateful for because I called the book The World's Best Bank. Also, they've been recognized by Harvard. They published the top 10 digital transformations of the last decade, and DBS was captured in the top 10. The CEO, Piyush Gupta, has also been nominated by Harvard as one of the top 100 CEOs in the world. And this was Piyush and I just a couple of years ago, you know, when we were having a chat for the book. And I just had a call with his team today because I'm doing another interview in the studio in a couple of weeks' time. So as I mentioned, the book came out. For those involved in digital, you'll know it's about moving from a product to a platform. So I thought I better live the experience. So I didn't just launch the book, I've launched a whole experience, platform experience of what happens around it. So you can benchmark yourself against DBS. You can look at your own individual maturity index. The Harvard case study that I published has, you know, had over 9,000 downloads now, done extremely well. So how did they get there? Well, let me give you a little bit of the backstory. In 2014, this is a picture of Piyush on the beach in Phuket. And I remember iPhone 7 years ago, or, you know, smartphones, pictures weren't so good. So he was with his top team and they were reflecting that they had achieved everything they wanted to achieve in the previous strategy. Piyush has been the CEO now for 11 years. The average CEO of a bank is 6 years. So he's already, you know, almost double that and done well. So the first strategy, you know, was very much to be Asia focused, improve the service, improve the culture, introduce technology as it was then. And they ticked all the boxes. So what next? Well, it was the perfect storm. We were at the tail end of the global financial crisis. So people's opinion of banks was very low. Times Magazine published that 74% of people prefer having dental surgery than visiting their own branch. That's how bad banking had become. And for those of us in Asia, we were very conscious of what was happening in China and the amount of startups, especially into transactional banking, that was happening. And Piyush sat down, and you'll recognize maybe the other gentleman is Jack Ma, who was then running Alibaba and just about to launch Ant Pay. And as Piyush said to me, Jack Ma scared the bejesus out of me. So the board gave the leadership team, let me just do a quick conversion, about 110 million pounds and said, go and invest in digital. It's not linked to your scorecard. It's not linked to performance. Go and have fun. Now, I turned to Piyush in one of my interviews with him and said, you know, they gave you a lot of money. He said, Robin, it was only 20% of our technology budget at that point. It wasn't a heavy investment. Of course, the investment paid off. And interestingly, they don't call what the initiatives they did strategies, they call them waves. Why? Because the waves flow into the next one. So the Asia wave laid the groundwork, the focus on being an Asian bank of choice, lay the groundwork because they cleaned up processes using something similar to Six Sigma. They became focused on customer service, improved the culture. The digital wave I'm going to share with you just a moment. And today, this flows into the sustainability wave that they launched in 2019. So how do you transform? Now, this is not a banking story. This is a story of a traditional organization becoming digitally driven based on a bank. And I appreciate that many of you are Europe-centric, UK-centric. So just a little bit of background. The taxi drivers in Singapore give us lovely acronyms. In the past, DBS stand for damn bloody slow, because it just took forever to get anything done. Today, it stands for Digital Bank Singapore. And in 2018, they were delighted when, sorry, it was 2016, when Euromoney gave their first ever digital banking award that DBS were recognized. Okay. Oh, sorry, there we go. So this is the strategy. This is the digital wave. While the leaders were sitting around in 2014 discussing what next, where do we differentiate? How do we leverage the technology? Somebody said, well, let's focus on the opposite of pain. If banking is painful, let's make it joyful. Now, you don't associate banking and joyful in the same sentence. But out of that came an opportunity that the leaders recognized. And that opportunity was to leverage technology to make banking invisible and to take the pain out of it and even make it joyful. I'll just give you a quick example. Many of us were used to having to do a transaction at our local branch, getting in our car, finding a parking space, getting into the branch out of the rain, then finding the right forms and a pen that works, standing in line, waiting. You get to the counter only to be told you filled in the wrong form. Of course, now that's something of the past because you just pick up your phone and you do it automatically. So how did they make that start to happen? How did they make the banking invisible and become the world's best bank? So one of the first things was to articulate which markets you want to attract first. Not all customers need to become digital customers. And to this day, the bank still has people who have a passbook and they go to the branch to get it updated because they're still not comfortable on their mobile. So the first thing that one of the first things you do is articulate who your audience is, your segment, and your market. Then with the digital purpose of making banking joyful, there were 3 strategic principles. And these are true for any organization. You need that core technology. DBS calls it becoming digital to the core. Digital allows us to get closer to the customer than we've ever done before. So we embed ourselves in the customer journeys. And the third component for the bank is changing the culture. You hear so often, we want a startup culture, but what does that really mean? And you can see in the picture that they jumped from 22,000 to 30,000 employees. And I show that because I've spoken at so many digital conferences, both virtually and in person prior to COVID, where people said, am I going to lose my job? And then my own research shows that companies who are successful in digital increase their headcount, not reduce it. So I'm going to very briefly take you through each of the 3. Actually, it's going to be 5 minutes on each, so it's going to be very brief. All right, so here we go. Many of you will resonate with this. What were the challenges for the bank? Now, they won't be the same as yours, but they'll be similar. For DBS, prior to their digital journey, 90% of their business was outsourced to 2 key vendors in technology. But they recognized if they wanted to succeed, they had to change that. They had to own and manage their own technology. Now, you might be sitting there going, yeah, of course. Well, I was working with a bank, which I won't mention, in Asia 2 weeks ago, and they struggled for 12 months because they outsourced the technology to a vendor, and the vendor had a different vision of what the end result was going to be, and they almost ended up in court. So not only did their whole digital transformation get delayed, but of course, leaders were preoccupied with dealing with vendors rather than dealing with customer experiences. I remember this is 2014 challenges. So today we take it for granted, but they're already thinking of cloud, and cadence is your speed, the speed of which you operate at. Just so I stay on time, I'm going to go to the main highlights. How do you get a group of people to think different? Now, you've heard many companies say, we're a tech company that offers, and then fill in the blank. For DBS, it was banking. Okay. For a supermarket, it could be food and beverage. For someone else. So how do you get a group of bankers to think like techies? Well, they didn't give you heavy folders or files to read or courses. They came up with a very clever saying. What would Jeff, you can see from the picture, Jeff Bezos of Amazon, what would Jeff do? So when they were in meetings, instead of thinking how bankers would solve the problem, they thought, how would Jeff Bezos and Amazon solve the problem? And Jeff Bezos, very much known for being customer driven. But a slogan on its own is not enough. So they visited the leading tech companies in the West. And Dave, who was head of CIO, Chief Information Officer at the time, was on the flight back from the US to Singapore pre-COVID. And he was doodling, and he came up, because he loves Tolkien and Gandalf, and he came up with the term Gandalf, the wizard of change. And this also stuck. Okay, so here we go. Sorry, so the Gandalf was, what are the best practices we need to adopt? So for example, I'll just give you a couple of examples. From Google, it was about open source software. From Apple, it was about design. And what was the D? We want to be the D of banking. So, the digital bank of Singapore. And the key takeaway from this is, don't benchmark against your own industry if you want to be number one. You have to leapfrog by finding better people outside of your industry. Now, last comment on the technology. Of course, today, we all know AI is your engine. And in banking, we're very operational heavy. So robotic process automation, RPA, fits perfectly into banking. And today, as we move from ops to no ops to AI ops, we're very much becoming AI as the engine, using machine learning. So for example, in anti-money laundering, AML, we used to have about 97% false positives. Using machine learning, we can now almost eliminate that. So we're doing things smarter, faster, and easier. And who benefits? The customer. But the first stage is, you must have the core platform. This is a heavy investment. DBS spent £500 million a year on their technology platform. Okay. Remember, I started off by saying 67% of digital transformations are failing. When people are losing money and capital, this is why. Because if they can't get the first stage, investing and upgrading their technology, then the rest will fail, because you need the core platform in place. So around the customer, strategy principle number 2 was about being customer driven, about delightful, hassle-free customer experiences, making sure satisfaction was top, and launching ecosystems. So wherever you are, you need to define, what does digitalization mean to our customers? Some organization, it means upgrading their website or their app. And if that's what it means, fine. For others, though, it means creating an experience that we could never have done before. So the bank changed their thinking. What would Jeff do? They started with the customer point of view. And from the customer's key touch points with the bank, they then reversed engineered how they could support what the customer wants. So they shifted the question.
I think they hit a lot of issues, or they, in their quest for growth, because they could only but grow from the floor up. If you're reading the book, they really felt they were at a low point, and actually had a bad reputation as in being slow and difficult to deal with. So in growing from there, they could only go but up. So I think there was a lot of the challenges were lined up. They had to try and get them right, because otherwise they were going to be outcompeted in their home market in Singapore without even growing further afield into the rest of Asia and Indonesia. So they had tremendous challenges. I think Robin has made it look very easy, but they started from a much more difficult place.
Yeah, I think that's fair, JB. I mean, you know, as a bank, and remember that this was a development bank, so it was originally state-owned. It wasn't seen as a commercial retail bank, and they totally transformed. And you know, when he talks about making banking joyful, you know, it's kind of, well, that's kind of a strange saying. Now, when they tested this with customers didn't understand what the bank meant when they said making banking joyful. So they changed it to live more, bank less. And it was all about, you know, how they could be part of the customer's life, but as Robin was saying, be invisible. So they were there, but, you know, they helped and they orchestrated things for the customer, but they weren't, you know, front of mind in terms of, you know, here's the bank right up front with us. Let me see any sign of Robin there. We'll do with some of the questions if we can while we're waiting. Okay, what sort of organizations do you think this approach will work? I think you know, the biggest thing for me about Robin's book is, you know, there's this debate all the time around, you know, can traditional organizations truly transform, or are they just going to be wiped out by the Amazons and Googles and Netflixes? And I think what Robin does in his book, he shows that traditional organizations, if they get the mindset right, and if they get the culture right, that they can transform and that they can compete, and they can actually, you know, operate like a Netflix or an Amazon if they're so inclined. But it all comes from mindset, because while he talks about digital to the core, actually the biggest drivers, to my mind, in reading the book, were the culture and the mindset of the leadership.
Critical is journey mapping in the bank today. Customer journey mapping is the go-to solution for anything that happens. And a core part of the journey mapping is to identify what's the job to be done. People don't want a car loan, they want a new car. So the bank spent a lot of time focusing on what's the job to be done. And then the other part of mapping is saying, what are the pain points? Where do we frustrate our customers? I'll give you one example. For example, back in 2015, there used to be long queues in the branches. And as a stopgap, they launched SMS, where instead of having to sit and wait for your queue number, you sent them a text, and 5 minutes before you were going to be called, you would get a message saying, please come to the branch. So instead of being forced to wait in the branch, you could go around, do your shopping, whatever was required. And then the last thing I'll mention on customer journey mapping is, of course, today, many companies were using design thinking. Now in DBS, they call it the 4D framework. Discover, define, develop, deliver. One quick question. Which of these 4 stages, discovering about what's going on, defining the problem, developing a solution, or delivering it into the business, where do you spend at least 50% of your time? Now, if we had more time together, I would get some inputs, but it's discovery. Yeah. At least 50% of the journey is in discovery. And this was about getting bankers out of their offices, out of their comfy chairs, out of their cubicles, and visiting their customers to find out what was really going on. And the bank moved, just to close this out, not from focusing on selling mortgages, which is very internal, but when you're customer centric, how can we help customers realize their dreams? And this became the focus. And it allows you to go from cross-sell to cross-buy, which is using contextual marketing. So those who are not familiar with the term, when you go on Amazon, you buy a book, hopefully the world's best bank, underneath it will say, here are 5 other books that people buy. And they know that 20% of people will purchase another product. So instead of pushing products, you pull them into what you want to do. Okay. Now, let me just go to the final one with 2 key messages on creating the startup culture. How does your culture need to transform? One of the top 3 reasons from our research, we interviewed over 1,800 leaders across North America, Europe, and Asia just a couple of years ago. And one of the top 3 reasons why digital transformation fails is because the culture does not support it. The other 2, leadership mindset and not realizing it's a whole business model transformation. So you need to identify what needs to change in the culture. And DBS went a step further. They said, what's the largest roadblock to us succeeding? And there was one very powerful answer: meetings. They had too many meetings that took too long and wasted too much time. Now, when you launch digital transformation, you're asking your employees to do more. And you have to, leaders are responsible for cleaning up and making the space. And in DBS, they did this by putting in a governance around meetings called Mojo. And Mojo stands for Meeting Organizer and Joyful Observer. And there were guidelines of how you run your meetings, being data-driven with an agenda on time, equal share of voice, and summarizing. And after you finish running your meeting, the joyful observer gave you feedback. Now, it won't surprise you that the world's best bank and leading digital bank has an app for the employees. What might surprise you is the app is also available to anyone. So they've made it as a public domain. So whatever smartphone application you use, you can download the Mojo app. What was the impact? The bank saved 500,000 employee wasted hours from meetings not starting on time, not being efficient, no agenda. And this created the space, the time. Okay. They also moved the dial on the percentage of employees who say they have an equal share in voice of meetings from 40 to 90%. Today, they used to have banners in the bank. Today, they're sustainably and digitally friendly. So now, for example, if you run a number of meetings and you get negative feedback from the observer, you get blocked from organizing meetings because you're not doing it efficiently enough. They also redesigned the workspace to be more agile encouragement. So it went from the culture from working in cubicles, which banking was notorious for, to open space that encouraged stand-up agile meetings. Okay. And here we go. So penultimate couple on culture, and then I got a couple of slides, Tony and JB, to close out on. So how do you change your culture? Well, in DBS, they used the ABCDE approach that they created. Just like your technology, the culture has to become agile. So speed up, the faster cadence, the response rate, responding to customer needs. They became a learning organization, the B. So everyone went back to school. They introduced reverse mentors, which is where an employee teaches a senior. something like coding. So senior leaders learn SQL and Python and other forms of coding. They became customer obsessed. Now, you might go, Robin, you just mentioned that. But they wanted to reinforce that it wasn't just external, but internally part of our culture. They became data-driven, which took them many years to clean up their old data and then put in place. And it wasn't about using data, it was about changing behaviors. And they wanted the bankers to take risk. Now, again, as bankers, we're trained to mitigate risk. So they had to create a culture of psychological safety where people feel open and trying new things. And to close out on this, I'm just going to show you this slide, which shows this is how they use the data today. This is just a recent picture from their data center. You can see massive coverage. Every part of the customer journey is mapped and tracked and acted on. All right, so let me just close out. What was the benefit? Well, in 2016, the leadership team had already put in the measures to track digital, and they discovered digital customers bring in twice the income. Now they were like, whew, this is fantastic. They went to the board with the good news, and the board said, hang on, before we start telling the analysts and investors and customers, let's just wait another 12 months. So they waited, and sure enough, consistently, digital customers bring in twice the income. What's even more interesting is many of us who initiate digital transformation are looking for cost savings at the bottom line by automating, by using RPA, AI, machine learning, blockchain. But today, when you look at the high-performing digital transformation companies who have been at it for more than 5 years, their top line grows more than the savings to the bottom line. How come? Because when you lock in your customers, they become more and more comfortable using your platform, and they do more business. So for example, in the SME, small medium enterprise, business volumes went up as much as 60 times. And we're seeing this now across many industries, that the top line, as you lock digital customers in, grows. So up until 2019, it was, all growth. Obviously, 2020 was a tough year, but interestingly, the digital had made the bank higher performing, and they had their highest operating profit of 8.43 billion because they could do more with less. Okay, so my apologies for the interruptions in the middle. That's a little bit of a teaser into how you transform from a traditional to a digitally driven organization, focusing on your technology, the customer, and the culture.
Super.
Tony, JB, over to you.
Really interesting, Robin. And the book is a great read. I have read it, and it really is. It's written in a way that it's easy to relate to, and all the light bulbs are going off. I suppose one of the big questions for me is, look, and I agree with you, that digital needs to be led from the top. How much of this is the CEO, or how much of this actually is the wider leadership team? And if it is the latter, did it start there, or is that something they had to work on?
It's a great first question, because yes, DBS did have a significant advantage. Piyush has a technology background. So when he and I were working together in Citigroup, he was head of operations and technology. So having a CEO who came from technology, first of all, is a little bit unusual. Secondly, of course, he had a grasp. So I remember sitting down with him in one of our early interviews in 2014, and he had already scoped out, and he was making comments like, it's not about just the hardware, it's also the software and the importance of people, which today we're all aware of, but then we're very just much focused on the new technology. So it helps, of course, we know it, but as we saw, 20 years ago from the book Built to Last, having just an inspirational CEO is not enough. So the leadership team, he does drive them and push them. He's very he does set a very high standard. But it took the whole leadership team transformed with him. There were very few of the original team he inherited who didn't make the journey to the digital. And I give him all credit for that in the bank, that he brought the leaders along with his purpose. And together, the leaders then shared a unifying, not uniform, but unifying purpose, digital purpose of making banking joyful. And last comment, when you talk to the people in the bank, I had 2 years of exclusive access, to the C-suite. Nobody talks about making banking joyful. They just were getting on and doing it. It had already been embedded.
Robin, I have a question for you on the insourcing versus outsourcing. So, you have a fantastic journey in the book about you were outsourced and then you had to get stuff back and insource it all again because of I suppose, lag and complexity and cost. Do you have a rule of thumb? Companies in the present day right now, is there a rule of thumb what should be insourced versus outsourced? If you're in this digital environment that we're in, what do you, is it just some of the hardware versus the software versus, can you give us some insights in that?
Absolutely, Jamie, thank you. And so the rule of thumb is 90% of your technology should be in-sourced. Why? Because the key word is speed. You need to be able to support, because your whole focus is about coming up with new, improved customer experiences by leveraging the technology. And you have to respond. And technology cannot be the bottleneck. And I'll give you how DBS did it. They had a wonderful term that caught on. They wanted to eliminate this, product of going to technology and they're having a list of 80 different things to do and you were 81 and they'll get back to you in 6 months. How did they do it? Technology is business and business is technology. And this was instrumental in not just accelerating the insourcing, but also breaking down silos. Because we all know in the past, the business set the goals and then turned to technology and said, well, what can you do for us? In technology and business being on equal terms, they come to the table, they agree the objectives and the measures. Then from there, they were able to move forward. So when they started insourcing, they spent 2 years reskilling and upgrading the abilities of their people, because they said we were vendor managers, not technology specialists. And they did bring in experts from outside. But to answer directly, your 90% of your core needs to be insourced. Now, what's the other outstanding 10%? It's your cloud management. So whether you use AWS or whether you use, whichever company you're using, it doesn't matter. Today, of course, cloud, it allows us to share data easier. It allows for multiple advantages. So that's the difference.
Robin, just on that point, I mean, in the book you talk about it. So if I'm head of IT, I'm just as likely to be asked about the business as I am about IT, and vice versa. If I'm head of business, I might just get asked the technology questions by the CEO. That sends a very powerful message in terms of how you need to work.
Yeah, you're spot on. And good on you for remembering that. Yeah, so you could be sitting in a meeting with the CEO and they're talking business, you're the technology head. Oh, it doesn't affect me. And suddenly he'll ask you, well, what do you think? So both of them had, or if let's say one was off on holiday, the tech head had to be able to stand up and share what was happening in the business and vice versa. So that it wasn't just an expression, it was delivered day in, day out.
And I think this is really important because when we talk about digital transformation, the word digital tends to be prominent, and then it gets framed as a technology issue. And a lot of business leaders and board executives, they run scared. By changing the dynamic, right? Where actually we're talking about the business, and whether it's the business aspect of the IT, it's the business.
Yeah, and it's almost like they switch off because they don't understand the language or the terms, but you'll never succeed if you just, because obviously digital transformation, the underlying message you're making, Tony, is that it's not the technology's responsibility, it's everyone's.
Yes.
Yeah, so well expressed, fully agree.
Yeah, Robin, you mentioned about the threats to retail banking at the time from a DBS perspective, and legacy banks and big tech and digital. So like right now, has anything changed? What are the biggest threats to, you know, people transforming into digital banks or even digital financial services?
Well, that's kind of a two-part question, JB. So let me answer your first part. What has changed? And this comes directly from Piyush when I was chatting with him recently, is he said the financial startup, the FinStart, they weren't a bigger threat as he thought they were going to be. And, you know, 7-8 years ago in banking, many of us were concerned that, you know, the whole business was going to change. But it turns out they couldn't offer the suite of services that a full banking allows you to do. So that was one of the key things that didn't evolve as big a threat as, you know, we all saw thinking back 7 years ago. Sorry, the second part of your question, JB, is?
Yeah, it's just no. I think if we in the present, has anything changed? And it's I'm very interested to hear about your thoughts on fintechs, because all the banks in Europe, I would say they're huge threats with PSD2.
Yeah, so the biggest thing that's changed, you know, today, as in 2021, is, you know, any bank has to be absolutely focused on AI as the engine and blockchain. Now, those were bubbling away a few years ago. Today, if you had to redo, or you were just getting into digital transformation, as you know, in banks, AI is such, or any organization, sorry, AI is such a phenomenal opportunity to run your operations and become AI driven and using machine learning. And then, you know, blockchain, not talking about the currencies, but using blockchain and supply chain management in being sustainable, friendly, and being able to track what's going on. Those are the two major ones that I would answer to your question that are very different today that weren't there a few years ago.
Well, the question has come in here, and it was the role of the regulator in all of this. It was the regulator, you know, willing participant on the journey, or was that something the bank had to work hard? Or, you know, so what's your thoughts?
The reason you see me smiling is I'm working with the regulators in a few other countries, which I won't mention. So they're trying to get up to speed. In Singapore, we were very fortunate. Well, I say we, the bank was very fortunate. The central bank was open to changes in regulations. And at the same time, Singapore as a country had a vision to be the first digital nation. So we've heard of digital cities, you know, smart cities. Now, you know, Singapore is on a journey, and the Prime Minister launched 7 strategies 7 years ago to launch, you know, to make us a digital. So the point here is the government was supporting the central bank, and the central bank was open to sitting down with the other banks as well as DBS and saying, okay, we need to shift. So for example, today we're all used to scanning QR codes for health reasons, but you know, back already 6-7 years ago, Singapore had already started to introduce QR codes. We were still behind China. You know, I show a picture in another presentation of the beggars on the street in China who hold up their mobile with a QR code, because 9 out of 10 people in China don't carry money anymore. They don't take a purse or a wallet. So in Asia, you know, we'd already started adopting QR codes. We were looking at digital payments, and the central bank was very much supporting what we call the Money Authority of Singapore. We're very much in collaboration. But I know in other countries in the Middle East and Asia, where I work with the central banks, it's, you know, for some bankers, they still feel it's pulling teeth to try and get, you know, some of these regulations changed. So I can understand some of the people on the call might still be feeling the frustration.
Yeah, Robin, in the early days of DBS, it looks like you were using all these new tools to solve all the old problems. And then it moved to a situation where you were really leveraging all these new tools, the journey mapping, the whole design, the agile or whatever, to really break into new markets. Was there a kind of a light bulb moment, or was it really thought out from the start? Did somebody say, look, this really works for the old stuff, and now we should look at new stuff?
No, and again, I'll refer you, JB, good question. I'll refer you to a comment that Piyush said to me in one of the discussions. He said, Robin, step one of his first strategy, he joined the bank at the end of 2009. He said stage one was to take the bank to be international. And there was a playbook for that. And any of us, to make your company an international standard, you're benchmarking against other of your industry. So he had a playbook. But in 2014, with the new strategy, he said to me, there's no playbook. Nobody knows how to build a digital organization, especially not a digital bank. So a lot of it was experimentation. And, for example, we were just talking about AI. The bank in 2015 partnered with a government agency responsible for AI here in Singapore. And they ran, a number of experiments. They all failed. Now, in the past, we would have been, oh, well, that was a waste of money and let's move on. But Piyush makes it very clear that was a learning opportunity, and not just Piyush, but the leaders, that they learned from that. So when they then went to develop further AI, the head of technology said to me, Robin, we don't want, we just need a B in our technology. And I was like, huh? And this is the guy who came up with GANDALF and, the other terms. And he said, we just need a B to go from A to B, collect the pollen from the flower and go back. We were trying to predict markets, use machine learning. We were trying to do too much too soon. So they staggered the growth. And they did, as they introduced AI into the business, they got comfortable with it. They learned about algorithms, how to leverage them, where the value from AI, machine learning comes from, and they built on it.
Robin, one of the things you talk about, which is really interesting, you talk about the view the bank took about older employees and new technology. And it was very important because I think if you look at any organization, those of us who are a little bit older, new technologies can be kind of scary. But the bank's mindset on this was fascinating. Can you talk a little bit about that?
With pleasure. I was actually in Scotland before the pandemic, doing a talk for the Scottish government. And one of the companies I was chatting with, this came out. They said, we're struggling. We can't get our digital to take off. And as I spoke more and more with them, I discovered they were applying all the new technologies to the younger employees in the organization and ignoring the elderly, or the longer serving employees, putting it diplomatically.
Like me.
Yeah, us. So it's a big mistake. It's one of the flaws that have tripped up many digital transformations, in that you think new technology, newer people. It doesn't work. And I'll give you a classic example. The bank was the first to introduce video teller machines in Singapore. So some things like you need to replace a banking card. Instead of having to wait in line, you just went to video teller machine and you could do it instantly. Now, the advantage of this was that it wasn't served by younger staff, which they did initially, but they actually found older staff who used to use Skype were more familiar with using that type of technology. So the video teller machine, they found older staff were a better fit. And Piyush was absolutely determined that the older staff would not be ignored. So the third hackathon that they ever conducted was for over 40s. And the whole point, Tony, was to fit what you just said. He didn't want people thinking, there's a term he uses that sheep can't become wolves, where he said, yes, they can. And he took the older staff, he put them in the hackathon, and after 48 hours, they went back and they said, look what I did at work today. And they produced an app to solve a problem in the organization. So, very much focused that it's got to be your whole everyone, it doesn't matter what age you are. Digitalization is age indiscriminate.
And another key thing I think was that ownership of customer journeys. Because look, a lot of organizations talk about all these things and they're kind of, in some respects, platitudes. Oh yeah, we do customer journeys. But it's not that simple in DBS. If I'm a senior executive, talk to me about customer journey management.
Sorry, from which angle do you want me to take it?
Ownership.
Ownership. So in 2015, at their leadership meeting, a whole day was dedicated to journey mapping. And after that day, every senior leader had on their own personal scorecard that they had to champion a customer journey within their business. So right from the start, it wasn't a department, it was, they understood that customer journey was the main tool for them to transform the customer experience. And everything they do is customer focused. So they, by making the leaders, first of all, know what was happening and then responsible for it, it became embedded very quickly. So today, the senior leaders have customer journey mapping as part of their own personal scorecards every 12 months.
Yeah. When you're actually reading the book, it looks like DBS was very prescient. They made all the right bets at all the right time before everybody else, seriously. But when I
know, JB,
customer journey mapping, I think you actually were looking forward and looking at the problems and looking at the headaches, and it gave you that insight into it that helped.
The reason you saw me smiling was I kept looking for failures. I kept saying, come on, guys, you must have messed up. I mean, it can't all have gone so. Part of the problem is we don't have failures anymore, JB. They're experiments.
Learning experiences, yeah.
Yeah. But
you talk about.
Please go on. Go on.
SG Findex. So is this the initiative to try and become that open banking kind of transaction hub, the bank for the other banks, or the transaction hub for the other financial services? What are your thoughts on that?
It's just, I haven't got a lot to say on it because it's just a small component of what's going on and it hasn't been a main drive. So, it's just, there's so much happening in the bank, but SG Findex is just one of the small activities happening. And I don't have an update on it.
Yeah, no, because when I read the book, I'm always trying to draw parallels between what's happening in Europe and what's happening in Asia. Yeah. It's slightly, different timelines. Okay, very good. Tony?
Yeah. Now, Robin, question in here around, in the early days, giving employees freedom to explore without being tied to metrics. And how pivotal was that in terms of getting the culture moving in the right direction?
Whoever asked the question, spot on.
No, I don't know.
No, I mean, it's spot on because if you don't give your employee, I mean, first of all, you've got to have that psychological safety that I mentioned very briefly. Amy Emerson from Harvard has done is a leader, the lead thinker in this field. And you've got to have a culture where you can put up your hand and say, hey, boss, I tried and it didn't work, but here's what I learned. Now, if you don't have that culture, then you're going to struggle. Let me give you a non-banking example, because I'm doing a talk for AstraZeneca, which is going out to like 10,000 people next week. And one of the examples I picked for them was the UK hospitals, where there used to be a lot of the key problems when surgery went wrong was because surgeons were very much front and center and other people were scared to speak up. And in hospitals today, my nephew is a cardiovascular surgeon in the UK, and it was from him I got the story, that hospitals are starting to change their practices, where in the theater, people will step up and say something without, the scared of how the surgeon will respond. Now that anyone can relate to that working in a company. If I put up my hand and say, I don't know, or question something, am I going to get shouted at or encouraged? And it's critical that you create that culture where people feel safe to open up. And it's not just critical, it's the #1 leader of building teams in a digital transformation. And that research is done by Google in a research called Project Aristotle. So spot on, Tony, thanks.
Robin, there's a question here about, is there a generic process to follow when implementing a digital transformation journey? I mean, maybe read your book and maybe consultant, whatever could be the one, but is there a canvas? Is there, a cheat sheet for this? What are your thoughts on that?
So the short answer is no. Why not? You have to first define what digital means to your, not organization, but customers. What is it that you're looking to do for your customers? Now, that then defines what needs to happen internally. Now, are there some hard-won insights from DBS, some best practices that you can adopt? Absolutely, of course. And we all know there's plenty of literature coming out now. I mean, this is one of the first books talking about traditional organizations become digitally driven, but there's plenty of case studies and stories coming. So there are best practices, but you have to build your own roadmap. Another reason for that is it's not a linear process. And what I mean by that is, it's not step one, step two, step three. There's two key components. First of all, what digital are you going to adopt? Where are you putting your money? Where's your CapEx going, your capital expenditure? That's part one, understanding which part of the new technologies that are around today, how you're going to use and leverage them. The second part of digital transformation is the word transformation. And we're failing at that more often than we succeed. So it's then transforming the people, the culture, the leadership, and all of it is unique. So the short answer again is no, but there are some best practices, some guides, and the tagline for my book is a strategic guide to digital transformation. So it's not a roadmap, it's a guide where you go in, you find what you're doing, what's relevant to you, and you can pick up best practices.
And Robin, in that space, I mean, a lot of it's back to mindset, ownership, visibly owning it, changing how you manage, govern. And one of the things you bring out is that they changed the balanced scorecard of the organization. So it wasn't just a case of, well, make banking joyful is a tagline over there. It actually became central to the scorecard.
Yeah, and Tony, it's one of the things you talk about is measure, what gets measured gets done. So if digital's not on your scorecard, then you're sending the wrong message to your employees, and employees will follow how they can get paid, so they'll follow the scorecard. So absolutely critical that you have digital measures, and digital measures are new for most organizations. Never before have we tracked the difference between traditional to digital customers, or the speed of the business, or the cadence, or the amount of ecosystems we have, or open APIs, or platforms we're building. And that's just the tip of the iceberg. So yeah, you need to change the measures, because what gets measured gets done. There's a very simple line I use. I don't think I put it in this book, but it's part of my implementation. Change your strategy, change your measures.
Robin, I have one maybe final question for you. You mentioned your innovation department, and its role was not to actually innovate, but it was actually to create the innovators that were going to do the innovation. So what are there new roles within the organizations that are popping up now as a result of digital transformation? Is there one or two key roles that you'd like to call out as being important, or is it everybody's job?
It's the latter. So and it's not just DBS, because I'm fortunate to work with other companies going through digital transformation. The top performing organizations recognize that innovation happens at anywhere and every point. Now, what I probably haven't emphasized enough is we're doing it for the customer. It's all about creating a better experience. The new technologies allow us to do mass customization, to use things like contextual marketing, to track every part of the journey map, and then work on that information. So you can't have it going to one department where it becomes a bottleneck. And at any time, somebody can come up with the opportunity. So, whether it's a Google, a DBS, or whoever around the world, a Tencent, an Alibaba, they've recognized that it has to be part of everyone driving it. And behind that is a supporting structure that we briefly talked about today that allows people to stand up with the skills, the capability, and the confidence to say, let's try doing something different. It's good for our customers.
Robin, one last question for me, and it's to do with culture. So, the culture in Singapore is not the culture in Scotland or Ireland. So yeah. Can the Western economies, can they do this? Or is it culturally too difficult for them?
Oh, no, 100%. I mean, initially DBS learned from the West. because, you know, the companies were open to sharing. We have great success stories coming out of the UK, Europe, and, you know, and other parts. This is not culturally sensitive in terms of what's happening. I mean, having lived in, you know, both the West and the East, you know, delighted to see, you know, but let me put it another way to you, Tony. Digitalization reset the competitive clock. So whereas Asia was playing catch up to most of Europe and the US in the past, globally, digitalization has given us a level playing field. And those who respond quicker, faster, and embed it into their business more successfully will reap the benefits.
Super.
Excellent, Robin. I think we're going to leave it at that because we've run out of time. I would urge
Thank you, gentlemen. Great question.
Online right now, but who's going to look at the recording, buy the book. It really is a fantastic read.
Yeah,
Thank you.
Super read. Thank you, Robin. And I'd like to thank the Digital Transformation Lab, Dr. Paul O'Reilly, Gráinne Bagnall, and Antonio Santos, and Cork University Business School for all their support. And to our audience, great to have so many questions coming through. Well, Robin, it's been a real pleasure.
Excellent.
Thank you,
Robin,
gentlemen.
thank you.
I wish everyone all the best on their journey. Stay
You
safe.
too. Thanks, Robin. Bye-bye.
Signing off.